D-Wave Quantum jumped 33% in a single day. Rigetti Computing surged 30%. IonQ, Inflection, GlobalFoundries, all of them exploded higher within hours of a single announcement out of Washington. This wasn't a product launch. It wasn't an earnings report. It was the United States government announcing that it was buying equity stakes in quantum computing companies, turning itself, for the first time in this way, into a shareholder in the race for the next great technological superpower. And investors are only just beginning to understand what that means. Let's rewind for a moment, because to understand why traders started buying with both hands, you need to understand what actually happened and why it is so different from anything Washington has done before. For most of American economic history, the federal government has played one very specific role in the story of innovation. It has been a customer. The Pentagon writes checks for fighter jets. NASA pays contractors to build rockets. The Department of Energy funds national laboratories to chase science nobody else wants to pay for. In every one of those relationships, the government funds the work and the private sector keeps the upside. That arrangement has held for decades. It held through the internet boom, through the semiconductor revolution, through the rise of Silicon Valley itself. Then, in the third week of May 2026, something changed. The Department of Commerce, through the National Institute of Standards and Technology, announced letters of intent with 9 quantum computing companies. The headline number was $2 billion, but the structure of the deal was the real story. This was not a grant program in the traditional sense. It was not simply a subsidy handed out to encourage research. In exchange for the funding, the United States government would take minority equity stakes in each of these companies. Structurally speaking, the federal government had just become a venture investor in one of the most speculative, most technically uncertain sectors in the entire economy. Think about that for a second. This is a government that, for most of its history, has kept a careful, almost sacred distance between public money and private equity ownership. Grants came with strings, reporting requirements, oversight, restrictions on how money could be used. But grants did not come with ownership. And what happened in May was different. The government wasn't just funding quantum computing anymore. It was betting on it, the way a venture capital firm bets on a startup, hoping a minority stake today turns into a windfall a decade from now. And Wall Street noticed immediately. IBM, the single largest beneficiary of the package, was set to receive roughly $1 billion, half of the entire $2 billion allocation, to establish a new standalone quantum foundry subsidiary. The company gave it a name, Anderon. Headquartered in Albany, New York, Anderon is designed to operate as a state-of-the-art 300mm quantum wafer foundry, matching the government's billion-dollar commitment with $1 billion of IBM's own capital. In a press release, IBM framed the investment in sweeping terms, describing it as a move that would help the nation solidify its leadership at the center of what the company called a thriving new quantum industry. One, it estimates, could generate up to $850 billion in economic value by the year 2040. IBM wasn't alone. GlobalFoundries, the semiconductor manufacturer, was allocated $375 million to build a secure domestic quantum foundry capable of supporting multiple competing quantum architectures, superconducting circuits, trapped ions, photonic systems, topological qubits, and silicon spin qubits. This detail matters more than it might seem at first glance. Nobody yet knows which underlying quantum architecture will actually win. Unlike classical computing, where transistor-based silicon chips became the dominant, unchallenged standard decades ago, quantum computing is still fighting a war of competing designs, each with different strengths, different weaknesses, and wildly different paths to commercial viability. By backing a foundry capable of manufacturing across all of these architectures at once, the government isn't picking a single winner. It's hedging across the entire technological battlefield, ensuring that whichever approach eventually proves dominant, American manufacturing capacity will already be in place to scale it. Beyond IBM and GlobalFoundries, 3 other publicly traded companies received direct allocations of $100 million each: D-Wave Quantum, Rigetti Computing, and Inflection. Smaller, more specialized players were included too, with Atom Computing, PsiQuantum, and Quantinuum reportedly receiving roughly $100 million apiece, while an Australian startup called Dirac was set to receive around $38 million, extending the reach of this American strategy beyond domestic borders. Now, here's where the story becomes genuinely fascinating from a market perspective. The moment word of this deal hit trading desks, quantum computing stocks didn't just rise, they erupted. In pre-market trading on the day the news broke, IBM shares climbed roughly 6%. D-Wave Quantum soared 19%. Rigetti Computing jumped 15%. IonQ rose about 9%. By the time the closing bell rang that Thursday, the numbers had grown even more dramatic. D-Wave Quantum closed the day up 33%. Rigetti popped 30%. Inflection rallied roughly 31%. IBM itself, a company with a market capitalization measured in the hundreds of billions of dollars, still managed to gain 12% in a single trading session. An extraordinary move for a company of its size and maturity. For context on just how unusual that kind of single-day move is for a company like IBM, remember this is not a speculative startup. It's one of the oldest, most established technology companies in American history, a Dow Jones Industrial Average component whose stock price typically moves in fractions of a percent on any given day. A 12% single-day gain on the back of a government funding announcement tells you everything about how seriously the market is taking this shift in industrial policy. But to really understand why investors reacted this way, you have to zoom out and see this deal not as an isolated event, but as the latest chapter in a much larger pattern that has been building for well over a year. This quantum computing investment did not happen in a vacuum. It is part of an expanding portfolio of direct government stakes in companies and sectors that Washington now considers strategically vital to national and economic security. The most prominent example, and the one that set the template for everything that followed, was Intel. Roughly a year before the quantum announcement, the United States government took a stake of just under 10% in Intel as part of an earlier CHIPS Act agreement. Since that deal was struck, Intel has hit record highs. And by some estimates, the government's position in the company has produced an unrealized profit north of $40 billion, a figure the administration has been quick to highlight publicly. That wasn't the only precedent. The government also engineered what's been described as a golden share arrangement in United States Steel, a special class of stock giving Washington certain veto powers over corporate decisions, as part of the broader approval process for Nippon Steel's acquisition of the American steelmaker. It took an 8% stake in Westinghouse, the nuclear power company, tying the government's financial interests directly to the future of American nuclear energy infrastructure. It has moved into rare earth minerals as well, backing companies like MP Materials, which plays a critical role in supplying the raw materials used in electronics, defense systems, and electric vehicles. Semiconductors, steel, nuclear power, rare earths, and now quantum computing. Each of these sectors shares a common thread. Each one is considered foundational to both economic competitiveness and national security in a world where global supply chains have become geopolitical battlegrounds. So why quantum, and why now? To answer that, you have to understand what quantum computing actually promises to deliver, and why governments around the world, not just the United States, have become almost obsessive about winning this particular race. Classical computers, the kind sitting in your home or your office right now, process information using bits, which exist in one of two states, a 0 or a 1. Every calculation, every piece of software, every digital process you've ever interacted with is built on that simple binary foundation. Quantum computers work fundamentally differently. They use quantum bits, or qubits, which exploit strange properties of quantum mechanics, superposition and entanglement, to represent and process information in ways that classical computers simply cannot replicate. In theory, and increasingly in early practice, this allows quantum computers to solve certain categories of problems exponentially faster than even the most powerful supercomputers on Earth today. The economic upside being projected for this technology is staggering. IBM itself has put a figure on it, suggesting the quantum industry could generate up to $850 billion in economic value by 2040. Other estimates go even further. McKinsey & Company has projected that just 4 industries, automotive, chemicals, financial services, and life sciences, could together capture up to $1.3 trillion in value from quantum computing by 2035. Some analysts believe the technology's total addressable economic impact could approach a full $1 trillion globally within the next decade. These are the kinds of numbers that make governments sit up and take strategic interest, because whoever controls the infrastructure, the talent, and the intellectual property behind this technology stands to capture an enormous share of that value, along with the industrial and economic leverage that comes with it. But the economic case, as massive as it is, might not even be the primary driver behind Washington's urgency. There's a darker, more pressing concern sitting underneath all of this, one that keeps cryptographers, intelligence officials, and financial regulators awake at night. It's a concept researchers have started calling Q-Day. Q-Day refers to the theoretical moment when a quantum computer becomes powerful enough to break the encryption systems that currently secure nearly everything in the digital world: banking systems, internet traffic, military communications, and cryptocurrency wallets. This isn't science fiction paranoia. It's rooted in real mathematics that has been understood for over 30 years. Back in 1994, a mathematician named Peter Shor developed an algorithm demonstrating that a sufficiently powerful quantum computer could factor extremely large numbers exponentially faster than any classical computer ever could. That might sound abstract, but it has enormous real-world consequences, because the security of nearly all modern public key cryptography, the systems banks use to secure transactions, the systems that protect classified government communications, the systems underpinning the entire cryptocurrency ecosystem, relies on the fact that factoring large numbers is, for classical computers, essentially impossible within any useful time frame. Shor's algorithm proved that a powerful enough quantum computer could shatter that assumption entirely. This is why national security officials increasingly view quantum computing not as an optional technological upgrade, but as a matter of existential strategic importance. Whoever builds a sufficiently powerful quantum computer first doesn't just gain a scientific achievement to celebrate. They potentially gain the ability to read encrypted communications belonging to governments, militaries, and financial institutions around the world, communications that were assumed to be permanently secure. Some security researchers have even raised concerns about what's called harvest now, decrypt later attacks, where adversaries collect and store encrypted data today, betting they'll eventually possess the quantum power needed to break it years down the line. In that light, the race for quantum supremacy isn't just about economic bragging rights. It's about who gets to write the rules of digital security for the next several decades, and who gets left exposed. Against that backdrop, the administration's quantum investment starts to look less like an unusual departure from free market principles, and more like a calculated bet grounded in genuine strategic anxiety, particularly anxiety about China. Multiple reports have framed this quantum funding package explicitly in the context of growing competition between Washington and Beijing over advanced computing. China has poured enormous state resources into its own quantum research programs, and American policymakers have increasingly argued that maintaining domestic quantum leadership isn't optional if the United States wants to preserve its position as the world's dominant technological and military power. This isn't a new theme in Washington. It echoes the same logic that has driven CHIPS Act investment in domestic semiconductor manufacturing, an effort to reduce American dependence on foreign chip production. Quantum computing is simply the newest front in that same broader campaign. Now let's talk about what this actually means for the individual companies involved, because the government's involvement changes the calculus for each of them in different ways. Take IonQ, Rigetti Computing, and D-Wave Quantum, often referred to collectively as the pure-play quantum stocks, since unlike IBM or GlobalFoundries, quantum computing represents the core of their business. These companies have delivered staggering returns for investors over the past 2 years, even before this latest government announcement. Rigetti's stock had already climbed by more than 4,000% from its lows. D-Wave had surged over 3,000%. IonQ had climbed more than 800%. These are the kinds of gains usually reserved for the earliest stages of genuinely transformative technology cycles, the sort of numbers that turn niche sectors into mainstream financial news almost overnight. But here's the complicated part, the part that separates cautious analysts from pure hype. These companies, for all their stock market enthusiasm, are still generating remarkably little actual revenue. IonQ, the largest of the pure-play quantum companies by revenue, brought in just over $43 million in a recent fiscal year. D-Wave Quantum brought in less than $9 million over the same period. Some of these companies were trading at valuations of several hundred times their trailing revenue. IonQ alone has traded at roughly 300 times trailing sales, while carrying a market capitalization in the tens of billions of dollars. That is an extraordinarily aggressive bet on a technology that remains, by most technical measures, in its commercial infancy. This is precisely why the government's involvement matters so much to the market's psychology. When a private investor puts money into an early-stage, unprofitable technology company, they're making a bet on a specific vision of the future. When the government does the same thing, especially at this scale, it sends an entirely different signal, one of institutional validation, suggesting that the world's most sophisticated intelligence and defense apparatus has looked at the competitive landscape and concluded that these particular companies deserve serious strategic backing. Whether or not that judgment proves correct in the long run, the signal itself has real market power. Analysts at firms like Jefferies and Wedbush Securities have already initiated formal coverage of the quantum sector, assigning price targets that imply significant additional upside for stocks like D-Wave Quantum, citing the company's dominance in quantum annealing, a commercially mature process already being used to solve real-world problems like workforce scheduling and manufacturing floor planning. Jefferies has projected compounded annual revenue growth approaching 70% for D-Wave through the end of the decade, driven by continued adoption of quantum computing technology broadly, not just within its own specific niche. It's worth pausing here to note that not every major financial institution is rushing headlong into this space with equal enthusiasm. Wall Street itself is somewhat divided on how directly to engage with quantum computing as an operational tool, as opposed to simply an investment opportunity. Goldman Sachs, for example, had assembled a team of highly specialized quantum scientists several years ago and partnered with Amazon in an effort to explore how quantum computing might eventually improve returns for its wealthiest clients. Yet more recently, reports suggest Goldman has scaled back its direct quantum computing ambitions. JP Morgan, on the other hand, has continued investing in the space, betting that quantum computing will eventually deliver meaningful advantages in areas like portfolio optimization, risk analysis, and fraud detection. This divide among the largest, most sophisticated financial institutions on Wall Street tells you something important. Even among experts who understand this technology at the deepest level, there is genuine disagreement about the near-term commercial viability of quantum computing, even as excitement about its long-term potential continues to build. This divide brings us to the criticism, because not everyone views this new era of government equity stakes as an unambiguous win for either taxpayers or the broader economy. Some commentators have pointed out the irony of a nominally free market administration pursuing what critics describe as quasi-socialist arrangements, essentially turning the federal government into a direct shareholder across multiple major sectors of the American economy. Others have raised more structural concerns, suggesting that this pattern of deals and equity stakes amounts to the executive branch effectively assembling a kind of sovereign wealth fund without the congressional authorization such a fund would typically require. There are also practical worries. When the government takes an ownership stake in a private company, that company suddenly faces a new set of expectations. Increased oversight, national security reviews, and potential restrictions on foreign partnerships that might otherwise have been available to them, costs that could offset the obvious short-term benefit of the funding itself. There's also a more grounded word of caution being offered by some Wall Street strategists, aimed less at the government's policy choices and more at everyday investors watching these dramatic stock price swings and wondering whether they're missing out on the opportunity of a lifetime. Quantum computing, for all its promise, still faces genuinely significant technical hurdles before it becomes a broadly deployed, commercially transformative technology. Hardware instability remains a persistent challenge. Many current quantum systems require extraordinarily precise conditions to operate. Extreme cold and isolation from electromagnetic interference, environments that are difficult and expensive to maintain at scale. There's also the risk of rapid technological obsolescence, since so many competing architectures are still being developed simultaneously, meaning real uncertainty remains about which approach will ultimately prove most viable for large-scale commercial deployment. None of this means the excitement is misplaced. It means the excitement, like most excitement surrounding transformative but still developing technologies, needs to be balanced with a clear understanding of the risks involved. History offers a useful lens here. Compare this moment to earlier stages of other transformative technology waves, the early days of the internet or the early days of biotechnology. In each case, enormous capital flowed into a wide range of companies chasing the same broad opportunity, and in each case, only a relatively small number ultimately emerged as long-term winners, while many others faded or failed to deliver on their early promise. Quantum computing appears to be following a similar pattern, an entire sector rising together on a wave of enthusiasm, even though the eventual winners will likely be determined by technical breakthroughs and the ability to deliver real-world value at scale, rather than simply riding the initial wave of investor excitement. What makes this particular moment different from earlier technology cycles, though, is the direct, deliberate involvement of the United States government as an equity participant, rather than simply a research funder. That distinction changes the competitive dynamics of the entire sector. It means these 9 companies now carry an implicit endorsement that their competitors, both domestic and international, do not. It means they have access to the kind of patient, long-horizon capital needed to fund extraordinarily expensive research and manufacturing infrastructure, capital that might otherwise have been difficult to secure, purely from private markets, given how unprofitable most of these companies remain today. And it means the American quantum computing sector now carries the weight of explicit national strategic priority. So where does this leave Wall Street? And where does it leave everyday investors trying to make sense of this rapidly evolving story? The honest answer is that we are still in the early, volatile chapters of a much longer narrative. The government's $2 billion investment, dramatic as it was, represents just one data point in what appears to be a much broader, sustained strategic commitment to quantum computing as a pillar of American economic and national security policy. More funding, more partnerships, and quite possibly more direct government equity stakes could follow in the months and years ahead, especially if China continues to invest aggressively in its own quantum research programs, and especially if concerns about Q-Day and the vulnerability of existing encryption systems continue to intensify. For investors, that uncertainty cuts in both directions. On one hand, the direct backing of the United States government provides a level of institutional credibility that few emerging technology sectors have ever enjoyed this early in their development. On the other hand, the sheer scale of the valuations already built into many of these stocks means the path forward is unlikely to be smooth. There will almost certainly be setbacks and painful corrections along the way, even if the long-term trajectory of the sector continues pointing upward. What's undeniable, though, is that the United States has made a clear strategic choice. Quantum computing is no longer being treated as a distant speculative research project confined to university laboratories and government think tanks. It has been elevated to the status of a genuine instrument of economic and national power, something to be actively owned, funded, and defended, in much the same way the country has historically approached other technologies deemed vital to its long-term security and prosperity. Wall Street understood that shift immediately, which is exactly why quantum stocks didn't just rise modestly on the news out of Washington. They exploded. And as the race between the United States and its global competitors for quantum supremacy continues to accelerate, both the strategic stakes and the financial stakes riding on this technology are only going to grow larger from here. There's one more thread worth pulling on before we close this out, because it helps explain why this story has legs well beyond a single news cycle. Quantum computing does not exist in isolation from the other major technological currents reshaping the global economy right now. It sits alongside artificial intelligence as one of the two forces most likely to redefine what computing power actually means over the next several decades. Drug discovery is one of the most frequently cited real-world applications. Simulating molecular interactions at the quantum level is an extraordinarily complex computational challenge, one that classical supercomputers can only approximate, often at enormous cost. A sufficiently powerful quantum computer could, in theory, model those interactions directly, potentially compressing years of laboratory trial and error into a fraction of the time. Materials science presents a similar opportunity, with the potential to design entirely new materials, from more efficient batteries to stronger, lighter alloys, by simulating atomic-level behavior in ways that were previously impossible. Financial services represent another frontier worth understanding, and it's one particularly relevant to Wall Street's own interest in this story. Beyond simply investing in quantum computing companies from the outside, some of the largest financial institutions in the world have started exploring how quantum systems might eventually be used internally to improve portfolio optimization, to model risk with greater precision, and to detect fraudulent transactions faster than existing systems allow. That's part of why JP Morgan has continued pouring resources into quantum research, even as some of its peers have pulled back, betting that being early to this technology could eventually translate into a meaningful competitive advantage in how the bank manages risk and capital. It's also worth remembering that the international dimension of this story is still unfolding in real time. The United States is not the only government treating quantum computing as a matter of strategic urgency. Reports have consistently framed this entire funding package within the broader context of global competition, particularly with China, which has invested enormous state resources into its own quantum research initiatives over the past several years. Some analysts have specifically pointed to allied cooperation as a critical strategic advantage for the United States, arguing that by working alongside partner nations, America can explore multiple competing technical pathways simultaneously rather than betting everything on a single approach. For now, the headline remains simple, even if the implications are anything but. The United States government has decided that quantum computing is too strategically important to leave entirely in the hands of private markets, and it has backed that conviction with real money and real equity stakes in 9 companies racing to build the technology of tomorrow. Wall Street responded the only way it knows how, with a wave of capital rushing into a sector that, until recently, most investors barely understood. Whether this bet ultimately pays off the way its strongest advocates hope remains to be seen. But one thing is already clear. Quantum computing has officially moved from the laboratory to the balance sheet, from theoretical physics to national industrial policy, and from a niche corner of the technology world to one of the most closely watched stories in both Washington and Wall Street alike.